Good afternoon and welcome to the Touchstone Exploration Investor Update. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted anytime by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Paul Bay. Good afternoon, sir.
Thank you very much, and good afternoon to you as well. And appreciate everybody taking the time to join me today on getting what I think will be partly an update of where we're at, including the acquisition that we recently completed in Trinidad, and sort of where we're headed for the next couple of months, because we've kind of hit the ground running here. So we're pretty excited to pass along all of that information to you. So let me start out by walking through the presentation, and then what we'll do after that is I'll open it up for questions. And I see there's already some questions in here, which is great. So appreciate that. Just a quick summary in case there's some folks that haven't seen all this data before, but our market capitalization now is just over $100 million Canadian, trade both on the London and Toronto Stock Exchange, AIM on the London Exchange, obviously. And so just over $100 million market cap. For our 3 months ended March 31st, that's the last quarter that we put out. And because we're on the TSX, we report quarterly as opposed to every 6 months like some of the other AIM companies. But you can see production was about 4,300 BOEs a day. Reserves just over 50 million barrels, BOEs, barrels of oil equivalent. On a 2P basis, independently evaluated at the end of the year. And I think the other thing that is really important is to look at this 2P reserve life index, so almost 13 years. So we still have a large proportion of reserves that we need to get out of the ground and convert that to cash. And what you're going to see and the takeaway today is we've kind of entered that drilling phase for the company, where we've accumulated land, property, everything we need. And now what we need to do is convert those reserves to cash. And that's our plan. The Trinidad opportunity, we are completely focused in Trinidad. We are completely focused onshore in Trinidad. The things that we like about Trinidad is it's an environment that is very conducive to the oil and gas business. It's well established. It's well over 100 years of production from oil and gas. So they get it, as we would say, and they encourage us to be there and to operate there. Supportive government. We had a government change here in April. The government, ironically, that is now come into play is the same government that was in place when we got these original licenses 10 years ago, where our main production comes from. So I think from our point of view, we feel positive that the new government's going to, has said all the right things, that they want to make sure that production continues to grow on the island, and they are willing to work with us. And certainly we have good contacts in there as we go forward. So it is a very supportive government from that point of view. They are supporting growth. The country needs oil and gas production. It's short about a BCF and a half a day of gas for both the LNG and petrochemical businesses. They're trying to figure out ways to bring that in, whether it's Guyana, Venezuela, or additional deep water plays, onshore plays. They're looking at all of those things. So that's when I talk about a supportive environment, that's clearly it. Advanced infrastructure, there is plants and pipelines, both offshore and onshore. So that infrastructure component, that long lag time from production to turning it into cash, is not very long anymore with all the infrastructure that's in place. I think the most important thing is talk a little bit about the rocks. This is the up-dip end of the Venezuelan basin. I know some people that have been in this story for some time know that this really, the opportunity here is there is hydrocarbons all through Trinidad. And, we've drilled 75 wells. And really the question is, we've always encountered hydrocarbons. Sometimes it's not producible, and sometimes it's been at very high rates. But this is really a hydrocarbon saturated basin. It's well regulated. It's English speaking, British law. So from that point of view, I think the rule of law, when we look at the government and everything else that's there, I think it's a fairly safe environment from an international regulatory basis. And market access. The reason I left that one till the very end here is that's really been the change for Touchstone over the last really couple of weeks since we closed this last acquisition of Central Block. Is there is different markets in Trinidad for natural gas. One is the domestic market, which is really petrochemicals and electricity. They burn gas to create electricity. And the other one is the LNG market. And up until a couple of weeks ago, we had no ability to access that LNG market, and the LNG market is at a higher price. So what this does is allows us to access that LNG market. And I'll talk a little bit more about that, why that's so strategic for us. Talk about the first quarter highlights for us. And, year over year, we did see a big production decline, but we also didn't drill any wells over that period of time. And you'll see a graph later where the wells that we're drilling have very high initial rates before they plateau out and level out. You get all your cash back, very high rates of return, but you do see these spikes in wells. And I'll talk a little bit about that technically, but I think we've got a really good handle on that now in what we're looking at doing. But the takeaway is these wells generate just a huge amount of cash into the market that we see. And this is a visual of what I was talking about. That big red block that you see there, that's 2 wells coming on production. And then the yellow block is basically another single gas well that comes on. So what you see is these big, huge ramp ups in production, get all your cash back, get all your capital paid for, and then they start to level out. And if you look at the underlying gray wedge and the black wedge, and even that red wedge on the end, you can really start to see where these wells start to plateau out. And the assets that we just bought, they've been producing for about 20 years. And similarly, once they get into that flat range, they become very predictable. And that's what we want to see. Is we're going to see these big spikes in production as we drill the next wells. But what we really want to do is focus on building that solid base wedge of production as we go forward. So what do we got now? The key thing for us is the land. And we did this through a combination of things last year. One was the Crown land sale, if you want to call it that, or licensing round, where we picked up Rio Claro, Chiruma, and Sapero. These are 6-year licenses. We've got commitments on them. We've got data on them. We've already got prospects on them. And we will just roll them out over time here as we drill them. The last bit that we did is the yellow piece that you see here, which is the central block. And you can see how it kind of fits in there as part of a puzzle piece. But the more important part of that piece of the puzzle is that it allows us to get into the LNG market, which is, I'll show you that in a little bit. But the takeaway from this particular map, from our point of view, is that we now control our own destiny in here. We have put together the land. We have all the gas plants now. Now what we can do is go ahead and you'll hear me refer to later as drill to fill. Just talk a little bit about the central block acquisition. This was an acquisition that we picked up from a major. It has 4 wells on it. Really, the 2 wells, CR1 and CR2, are the main contributors. This was drilled around 1999 to 2002, was brought on production. Interestingly enough, when they brought these wells on production, they had compression at the facility right from the beginning. So these wells never saw the ups and downs of the line pressure like we're seeing at Cascadura. So I think that may have been a better approach, and in hindsight, that would have been a nice thing for us to do at Cascadura on day one. And I think you would have seen a different production profile than what you see, than what you have seen in that previous graph. But these 4 wells have now been on production, but virtually nothing has been done to these wells over the last 15 or 20 years. And it's an 80 million a day gas plant, and it's covered by a 3D seismic program, also the same one that we used for Coho. So, but these wells were drilled before the 3D was shot. So we think there's some opportunities on the technical side to take that data, rework it, which quite frankly, we've already done some of that. And then we'll be able to drill some additional wells, and I'll talk about that in a minute. But the key takeaway is it's a nice little tight package, and it's got some great reserves to it. We're 65% and we're the operator in here. It goes through a plant that's referred to as the Evergreen gas plant. And you can see there's 4 wells that go into that gas plant. The plant itself was commissioned in 2007. The wells actually came on production before that, while the plant was being built. 80 million cubic feet a day of capacity. I think it peaked out at just north of 80 million a day. And it's got about 10,000 barrels a day of condensate capacity. We'll talk about that as well. We think there's an interesting oil opportunity at Central Block as well. And then the pipeline is both connected to the LNG market and to the domestic market. So the beauty of this asset is you can sell gas anywhere on the island from here. Because it's been run by a major and it's sweet gas, you haven't seen a lot of corrosion, if you want to call it that, in the plant. The plant is really in pristine shape and really is a great opportunity. We paid $23 million for this asset. And if you exclude the LNG contracts, if you exclude the production and you were just to try to rebuild this plant today, it'd be way more than the 23 million. So from our point of view, we think that this was a really nice add to our net asset value. And this is an aerial shot. Talk a little bit about that a little bit further. But maybe before I get off this, because this is a really a good view, you can see the two wells in there, CR1 and CR2. The first wells that we're going to drill in here will be directly offsetting CR1. And you can see there's quite a bit of open land there and a bunch of open acreage. So we'll be able to move very quickly on this. As a matter of fact, we got the keys to the plant on a Saturday. We had the surveyors and all the forestry people out there on the following Wednesday, starting the process to get this ready. So it's moving along very quickly. And as you can see, there's quite a bit of room in there for us to do what we need to do. So the phases that we've got for Central Block, number one will be to optimize the 4 existing wells that are there. I do these little chats that are one-on-ones with the CEO, with a bunch of the plant people. We picked up 14 employees from Shell. There's no additional G&A ads for this asset. But of the 14 people, I think I've chatted maybe with 10 of them so far. And what's really interesting, a lot of them have been there for 12 to 15 years, and they've had a whole bunch of ideas that they wanted to do to increase production and lower costs. But, this hasn't been top of the priority for the major that owned it before. So we're really, it's really been fun to talk to them and understand some things. A couple of the quick things at phase 1 at the beginning is these wells are still producing up very, very large tubing, which means any of the liquids like the condensate is restricting the flow of these wells. So some simple things like just downsizing the size of the tubing from 4.5 to 2 3/4, 2 7/8. We should be able to get more velocity, get more lift. There's those kind of things. There's a couple of pieces of equipment that aren't running at the plant right now that could recover more liquids. So as we drill these wells, they're basically saying these pieces of equipment can be turned on and we can recover some more liquids and get some more economics out of it. So there's that side. On the production side that we see some short-term things. Just on the expensing side, water disposal, a third party was doing that for them. We obviously have a water disposal well, so we can do those kind of things at a much lower rate. So that's all kicked in on day one, and it's been really fun to work with the staff at the Central Block, that they're actually getting to do some of the things that they've wanted to do for a long time. The next thing we're going to do is that drilling program. Initially, a 2-well program. As I talked about, we're already in the surveying and forestry stage. So that's kicked off right out of the gate. And we'll get that done as quick as we can. And I'll talk about that sequencing that we've got coming up. And then further beyond that, what we'd like to do, and I should mention the first 2 wells in that phase 2, we want to get those drilled in 2025. So they'll be drilled before the end of the year. And then the third phase of this is taking a look at a more sort of holistic approach. Now that we have Central Block, we look at Coho, we look at all the other prospects that we have, Gibba, any of those prospects that we have that can come down into the plant. Even Sapero that sits north of Coho, that new land that we have. If we were to get gas there, we would just bring that down to the Coho tie-in and take that to the Central Block and be able to sell that into the higher priced LNG market. So we're putting together this master plan of that encompasses all of our gas acreage on the east side of the island. It's an illustration for kind of why we see this as a real game changer from us. Basically, these are the 3 markets that you can sell to in Trinidad. The one to the north there, Point Lisas, is basically the petrochemical market. Point-à-Pair is where all the oil goes to. It's the old refinery where all the tankage is that our oil production goes to. And then to the south is Point Fortin, which is the LNG facility. And up till October of last year, that was just Shell and BP. The National Gas Company bought a piece of that, so it kind of made it a common carrier and kind of opened the doors for third parties to go in there, but nobody could physically get in there. It was kind of, to be honest with you, I think it was done more to attract Venezuelan gas. But the ability for us now with the Central Block facility, because it is tied into Point Fortin, what we can now do is we can now take that Central Block gas, and because we pick up the gas contracts as well as all the assets at Central Block, we're now able to move gas to the LNG facility. So when we take a look at any of the developments at Central Block, you look at Coho, you look at that Sapero Block to the north, all of that could come down and go into the Central Block. And the one thing that we still haven't lost sight of is there is a deeper play in the Cretaceous below all of these lands. And again, if that were to be gas, or if there was associated gas with it, we could take that into the Central Block. So there's both a marketing point of view, there's a development drilling point of view, and then there's the exploration layered on top of that. But you can see how this kind of changes the dynamic of the marketing for us. So what do we now have for capacity? We were at about 48,000 BOEs a day. You add in the Central Block, we're at about 72,000. You compare that to the just north of 4,000 BOEs a day that we were producing. There's this gap now. There's a gap between the reserves we've got, between the capability we have to process gas and oil, and then what we were actually producing. So the nice thing now is all the cash that we have, we can put into the ground to basically drill and tie in the wells. So this is the drill to fill program, and really it's the drill to fill is to fill up the gas plants. The drill for growth will be some of our legacy oil properties that we've got that, the economics on the last couple of wells we drilled are very, very interesting. And then drill for the future is our exploration program. And I know I've had questions about the equity issue that we did along when we did the acquisition. And quite frankly, that was done so that we could meet this slide. We debt financed the acquisition, but what we needed to do was get some more equity in so we could get to a continuous drilling program, so we could take advantage of all of these assets that we had now put in place. And by doing it at the same time as we did the acquisition of Central Block, it really wasn't dilutive on a per share basis when you look at the cash flow, when you look at production, and you look at all those other things. So we felt it was the right time to send that message. You'd obviously always like to be able to do these at a higher price, but what we needed to do was be able to make sure that we were fully funded to kick us into this drill to fill program. And the last part is what I don't want to miss, because it is really a very big component of what we have. Sapero, which is that block that sits just north of our Ottawa block. This is uncontracted gas. So this is gas we can bring down to Central Block. It's a beautiful structure on the 3D. We've done some looking around at whether or not it would be an ideal place to take one of the deeper shots. I think initially we'll just look at the Herrera in here. It basically is a lookalike structure to our Cascadura structure. It's on that same trend. It sort of sits between Cascadura. You come down through Sapero, and then you end up over in Barrackpore, which has done 100 million barrels of oil. We think it's in the gas window, but either way it would work out fine. And then to the north there on that Chiruma block, this would be a new play for us. This is the Nariva and the Cretaceous play. So this is what I would call true exploration. There's been some other players in the country before that Parex was here. Some of the other local companies that have really always wanted to drill this particular structure. It's very unique on the island. It really does jump out, and it's one that's only at 7,000 feet. So we think it's one that we want to move up in the portfolio and take a look at it. So very interesting on that point of view. And then, sorry, I'll just go back. And then underlying all of this is the Cretaceous play. And that's the big play that's been down in Guyana. And you can see that in the Sapero block, we can get there at 13,500 feet. We believe it sits below Central Block. There is a beautiful anomaly there. And there is another anomaly that sits over sort of on the north end of our Ottawa Rio Claro block. Rio Claro sits on here as an exploration acreage. However, I feel a little bit differently about that now. We actually drilled a well at Cascadura as far to the east as we could, and we had an oil discovery that's actually going to go on pump here in the next month. But really what that did is it showed that there's hydrocarbons onto that Rio Claro block. We know we can come up structure onto Rio Claro. So I think from the oil side of things, Rio Claro is more of a development play. However, on the Cretaceous play, it definitely would fit into this exploration category. Social and the governance, we are by far the biggest onshore independent now in what we're looking at for production. We control all three of the gas facilities that are onshore. fully staffed up. The nice thing for us is that we didn't add any bodies with this shell acquisition besides the field staff. And this can just kind of fold in, and now we can put the plan together as what we've done. We've had some challenges on the drilling side. I know a lot of people have probably looked at that and asked some questions on that. We've actually done a full revamp of the drilling plan and the drilling program and personnel and contracting. And so I think when we go forward on our drilling program, I think we're going to be able to deliver some really interesting results as we go forward. This little breather in doing the central block deal has given us the opportunity to evaluate that as we go forward. So that's the main part of the presentation. I know there's going to be lots of questions, so I'll maybe take a pause there, and we can go forward from there.
That's great, Paul. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions, and you can do so just by using the Q&A tab that's situated on the top right corner of your screen. But just while Paul takes a few moments to review the questions that have been submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboards. Paul, as you can see, we have received a number of questions throughout today's presentation. If I could ask you just to read those out and give responses where it's appropriate to do so, I'll pick up from you at the end.
Yeah, and I may abbreviate some of them. Some of them are kind of long, so I'll cut through the chase on some of them, and then if there aren't some that I can answer in there, I'll let you know. But yeah, the first one is, I think it's a fair question, is sort of how long is it going to take to deliver on some of the stuff that we promised? And in fairness, I think we've had some disappointments in the wells and the decline rates of the big wells at Cascadura. But generally speaking, I think when we kind of step back and put in place the Trinidad factor, which is things take a little bit longer. And for anybody that's been on the ground there, it's much more remote than people sort of fully appreciate for getting things done. And, we've missed some timelines, but at the end of the day, we certainly have, got things done like Cascadura, like Coho. Even Central Block was a big deal for us to get done. So, the question is when can we deliver on some of the things we promised? Well, I think that the key now is to get the wells drilled. That's the last piece of the puzzle for us, is we need to get these wells drilled. We need to get them drilled on time. We need to get them drilled on budget. And one of the big helps of that will be drilling them back to back. Get the rig hot, get it moving, and we can drill these wells back to back. And that's really what we need to do. So I think this next quarter is going to be a quiet quarter from a production point of view. We will get the add from the asset acquisition that we did, but when you're really going to see the changes in Q3 and Q4, when we start to see these new wells coming on, and then we can add the continual drilling to them. So that's I think it's a fair question. I think we had a pretty big setback when we looked at those initial declines at Cascadura being deeper than we wanted to. Having said that, I think we've answered those questions. I think we've been transparent on that. And we're now using that new data that we have, the new type curves we have for those wells, applying them to the wells that we're going to drill now, and look forward to being able to deliver on the new estimates that we'll put out here once we've got all the data. I'm just going to go back to a map here, so I've got a map up when I'm talking. There, we'll leave that one up. The next question is, are the volumes from Coho still being restricted at Central Block facility due to pressures? And we were going to sort out some of those issues as part of the purchase. Yeah, it's the Coho volume. When you looked at that wedge that I had there, you could see that it's virtually flattened right out. I wouldn't say it's really being restricted by the shell pressures. I'm not sure that would be factually correct. The shell plant runs at a pressure, and the Coho well is now going into that pressure. We could lower the pressure at Central Block. And there is a process to do that, where we could take the two compressors that are running side by side and putting them in tandem and lower the pressure. We don't want to do that until we do these recompletions of the wells and probably drill the first two wells at Central Block, only because when you do that, you reduce the capacity at the plant. And we don't want to do that until we know exactly what we're dealing with for production at Central Block. So that might be a 2026 plan. Now, there are more wells to drill at Coho, and we've been talking about that for quite some time. But I think what we are starting to do is now look at this as an entire package of assets, right? So the development Coho well, if you could drill it on the Central Block side, lands as opposed to on the Ottawa lands, it becomes uncontracted gas versus contracted gas. So those are the kind of things that we're looking at to kind of figure out what we want to do before we put that plan together. But it's a long-winded answer on Coho. There's a bunch of moving parts, but this is really one of the things that Central Block brings to us is it now we need to look strategically at every well we drill, because there's these different pricings in the wells as we go ahead and drill them. So an opportunity for Coho, a development well at Coho, do we really want that going into a market that's selling 225 gas when it's literally hundreds of meters away from being able to get 2 or 3 times that amount of money, right? So that's one of the challenges there. When do you expect to be in a position to start continuous back-to-back drilling programs of the 5+ wells? So all the new consultants are on the ground this week, setting up the new program, making sure that we got all the right pieces in place. And, that program should kick off in early June. But there's actually people on the ground now getting that all ready to go. So the first 2 wells that we'll drill will be the 2 wells and at Cascadura on the B pad. And then we'll move to Central Block. And then depending on where sort of the situations go, it could be back to Cascadura for a couple more wells. We do have 4 wells approved at Central Block. So we may actually find if we have success there, that may be more of a focus, but it'll become a little bit fluid at that point as to where we move. But I think this is a really, really informative question. And the key part in that is, when can you start doing a continuous drilling program? And that really gets back to my comment about the equity, is this allows us to start to focus on doing a continuous drilling program. In the presentation last week, we stated that the private placement brought in a couple of strategic investors, and there hasn't been anything published on that. Yeah, I got to be a little careful on this. The onus is actually on them to report. It's not on the company to report, and obviously that's confidential information. I can't disclose that. It's really, the onus is on them to disclose. And I don't know how they hold that in their fund of funds. That might be how they can get around not disclosing what their interests are, but that's purely speculation on my point of view. Why were existing shareholders denied the opportunity to participate in the private placement? I think in light of what we were doing and the way it was done, the question also in here is, did the Republic Bank ask us to do the private placement as part of the secured loan? They when they look at this asset, and when we looked at this asset, the real value here in the upside is drilling the additional wells. And we both wanted to make sure we were funded to do that program. So as part of this process, we agreed it made sense to go out and do an equity raise as part of that program. But let's be clear, the bank didn't force us to do that. That was a decision that we made and the board made to make sure that we were properly funded. And as I mentioned, from our point of view, it wasn't dilutive on a cash flow or production per share basis. So I think in a normal world, what you would have done in this acquisition is you would have done partly debt and partly equity. And that's really what we ended up doing here, although all of the debt went to the purchase price. The next one, the investors were led to believe that buying the Central Block would open the door to higher gas prices. So it would have been disappointed here to say that now we're locked into a lower price contract for the first 16 months, and then it flips around at a higher price contract. Yeah, I know I mentioned that, and I probably should have clarified that. The Central Block gas gets a higher price from day one. Like, let's just make that clear. There's 2 contracts at the Central Block, and this can take me just a little while to explain this, but up to about 22 million cubic feet a day. That's a gross number. Up to 22 million cubic feet a day. There's a contract that runs until May of 2027. And the factors in there are a combination of Henry Hub, the Brent oil price, and the LNG price markers from round. So because it's got that Henry Hub component in it, you get a little bit lower price. Now Henry Hub price has been pretty strong, so that's been a nice price. When you move to that 2027, that May 2027, what actually happens, or you get above 22 million a day, which is, we hope we can do that with the first well that we drill. Those volumes then go to pure LNG, and then there's a small Brent component in there, so you lose the Henry Hub component. So you get a higher price for that base gas right from day one, and I apologize if I sort of misled people on that. But what happens is that Henry Hub price falls away or that Henry Hub component falls away when you enter the new contract. So you get another step up in the gas price, and it becomes more of a pure LNG price with a small Brent price. And the good news on that is Brent decides to go through the roof for some reason, and with everything we're seeing in the world, that could happen. You'd also see an uptick in your gas production or in your gas price. So apologize for that if I didn't kind of relay that. In the new presentation that we're putting out, there'll be a nice graph in there that'll kind of explain that, and everybody will do that. Part of what we're dealing with right now is we're just making sure we're getting all the right data from the last 6 months from the central block. And once we've got all those hard data in from Shell, we'll go from there. In fairness, they didn't want to give us all the data till it closed, so we're drinking from a fire hose a little bit in the last week because we've just been getting data after data after data. So let the team work through it and just confirm all those things. I think that answered that one, Ted. Can I let you know the revenue from Central Block accrues from January? Yes. So the way this was a lockbox. We get all the revenue and all the expenses from January, February, and March, and you'll see that when we get the new guidance. Now that doesn't mean we're going to count that as our production. That's just an adjustment in the pricing that we did, and you actually saw that when we closed that. But again, we want to confirm, and a little bit different than Cascadura, where we get paid on the 25th of the following month. The Central Block volumes, because they're going to LNG, you get paid when the boat floats. So you'll have some months where you'll get paid twice, and you might have a month where you don't get paid at all, although we haven't seen that yet in the data that we've seen. So you don't get that consistent production. Nice thing is you do get the LNG price and you get paid in US dollars. So we'll have that for you. What is the issue with CAS 4, and how will you learn from the cost overrun, and what was the well cost so far? So the CAS 4 well is the first development well that we were drilling at Cascadura. And the plan there was to switch from an oil-based drilling system to a water-based drilling system. Thought it would save us about $1 million. Quite frankly, it didn't work. We've been pretty transparent on that. We were afraid of getting stuck in the hole again, so we suspended that well, and I've now switched over to an oil-based system. It's taken a couple of months to get the chemicals and all the oil-based system back in there. So now what we got to do is go back in, and we'll drill 4 and 5 on 2 wells on that pad and go forward. The costs in there, I'd have to go back to the MD&A and take a look, but I know in the first quarter we put out what the costs were. I think we were north of $5 million on CAS 4, and I'm not sure what the AFE looks like going forward on the well yet, but we'll look at that. I mean, bottom line is it's too much. That's and that's why we've done this whole revamp of bringing in some additional experts, additional people on the ground, working with Schlumberger, going back to what's worked for us on some of the other wells, and done a relook at it. We really should be able to drill these wells in 18 or 19 days, and we should be able to drill them for under $5 million, and that's where we need to get to. So that's the plan and what we want to do. The next one from John: the production decline rates on gas wells has been disappointing. We've been advised the company believes because dual porosity system in the reservoir. Please, could the company publish individual well production versus time, or if not, give details of the rate declines of the matrix phase production? Well, we're not going to publish that, and I'll tell you why. Is it's confidential information, and we think there's an advantage for us because of the way we can look at some of the other wells on the island and some of the things that we think we can do. So I can tell you right now, we're not going to publish detailed well by well information. I think we've been pretty transparent on showing the curves. If you look at our last presentations, we saw the decline curves for CAS and the other productions. But if you look at those graphs, you're going to see that. And you talk about these decline curves being disappointing. Yes, they are disappointing, but that is the business we're in. Wells decline every month in what we see. But what we want to do is we want to get into that flat wedge where you've got chunks of this really predictable wedges, and then we're going to get peaks in the production as we go along. So we'll continue to be transparent on giving on the Cascadura production volumes. The one thing we have found at Central Block is the wells are way more predictable and the declines are way more predictable if you put a compressor in the front of this and they don't see the up and down on the line pressure from the LNG from the natural gas company. So, that's maybe a tactical error when we built Cascadura. If we had to drop the compressor in at the very beginning, you would have been able to control those declines because you wouldn't have been at the whim of the pipeline pressure. So that's definitely a learning from our point of view in what we see. I'm not trying to dodge that question, but I don't think we want to put out technical information to the public that, quite frankly, can still be quite a big advantage to us in what we see. Can we get LNG prices immediately? What percentage of CVs sold to the LNG price? I think I covered that off in the contract discussion, how that moves up. What is CB acquired LNG current contract price? So the question here is, what's the current price for the LNG? And you'll see when we put the new guidance out, what it has been for the last couple of months. It's going to change every month because of those three factors that I put in there. So as Brent price goes up and down, as the LNG price goes up and down, as Henry Hub goes up and down initially, and then when Henry Hub falls off. So you're actually going to see that change based on the LNG market. But the biggest component is the LNG market. So if you want to get an idea of what Touchstone is going to get paid out of Central Block, just see what the LNG market does, and you'll be able to get a good proportion on that. There is a component to move the gas from Central Block to the LNG. That's a fixed price, and then there's a fixed price for processing at the LNG. So you're going to see that in the new guidance. We'll kind of disclose what that model looks like. I think if you roughly think of it today, it's probably $2 off of the LNG price gets you back to Central Block. Is it possible that we can get LNG prices for Cascadura earlier than the 5-year negotiation? And then the comment on the end of this is, we aren't getting fair prices. No, we're not going to get the LNG price before the end of the 5 years. That's just, it's contracted gas. There's no way to do that. And when we say we aren't getting a fair price, I think we are getting the onshore price in Trinidad. Whether we like that price or not, I agree with you. I certainly like a higher price, and we think there's some ways that we can maybe negotiate our way to get a higher price on that gas. But there is gas that goes to this domestic market, and even if you look at our number today of, call it 228 in MMBTU, Henry Hub price is sub $3 today. I think it was 278 yesterday. And when you think our price is at the wellhead and Henry Hub, you've got to subtract transportation to get there. It's not like we're talking 3 or 4 fold difference here between what you would get between that gas and what you would get for onshore North American gas. So I think we have to keep that in perspective, but it also really emphasizes the point of why we want to do the Central Block deal, is it gets us into the highest price natural gas market in the world, which is the LNG price. And that's why this is so strategic for us. I don't necessarily disagree with you that we're not getting a fair price. I think we're probably one of the lower priced contracts on the island, and I agree with you. I don't think that's fair. So let us try to work some magic on that. Q1 production numbers for the Central Block and pricing levels for gas and liquids. We'll give you all of that. When we put out the new guidance. But in the initial one, we looked at about 2,000 BOEs a day of production from Central Block. That's been consistent. That hasn't changed. So that I can give you that number, but you'll see, you'll start to see, and when you get the new guidance and what we're looking at doing. Paul, with TXP's strategy, drill to fill, there's going to be a lot of report on going forward. Can TXP commit to doing a monthly public investors meet webinar, presenting updates and doing a Q&A? Yeah, part of our problem, if you look back over the last 14 months, is we had the Trinity deal that went sideways on us. Oh, quite frankly, we got outbid on it. But during that period, we couldn't say a lot of things. And then all of a sudden, just when we were getting going again in October, I get the call from Shell saying, hey, we want to do this deal, but it's got to be signed by the end of December, and we want to close it in the first half of next year. So, we've kind of been handcuffed a little bit. But I think I won't commit to a monthly update because I'm hoping we can do more than that. I'm hoping that between our social media new strategy we've got, as well as continual disclosure that we have on from our financial requirements, but also just being a little more active on some of these things, and mainly because we're going to have more to talk about now. I mean, that's one of the advantages that we see here once we get the continual drilling program, And so I won't commit to doing a monthly update on a particular format or a particular platform, but I think what you're going to see is a lot more updates on a continual basis. And I've heard from a lot of shareholders that some of the things, that we don't need to wait just for material information. Like, it's of interest to them knowing that the wells have spudded. It's interest to know, what's going on at Central Block and those kind of things. So we've taken that in. We had a great discussion at the board here at our quarterly to kind of ramp up that program a little bit. So we hear you on that one. Alan, when can we start continuous drilling, and what volume production rates do we need to be able to do so? I talked about when we're going to start the continuous drilling program. As far as the volume rates go, quite frankly, what we've done is taken the new curves that we now see from CAS 1, CAS Deep, and CAS 2, the 3 gas wells. And basically what we've done is we picked the lowest one of those bunch, and that's what we're using as the new production curves. And if you use those production curves, Alan, basically we can have a continuous drilling program. It generates enough cash that we just keep going. And if we can really get these Central Block wells drilled, when I talk about, the real kickoff for Central Block is to get over that 22 million as fast as we can. And then you get into the higher price contracting. And again, I want to be careful. Central Block is higher price. It's the higher of the higher price contracts that we want to get into as quickly as we can. But the economics change pretty dramatically. I mean, even, you look at Coho at a 5 to 10 million a day well, if you can get the higher price contract on that, those wells just become very, very productive. Have we overspent on Cascadura plant in relation to the poor gas volumes so far? I would say yes. I would say the Cascadura plant, was originally designed for, I think at one point we were, the build out was going to be for about 200 million cubic feet a day. Fortunately, we didn't put everything in place for that. We put in some of the inlet headers and things like that. But the plant was originally capable of about 90 million cubic feet a day. With the new separator we put in, we can probably get to about 140 million cubic feet a day. So have we overspent on it? There are some things we definitely overspent and overdesigned. So the key now is to optimize that. But the benefit is we don't have to spend any more money on it. We can drill to fill that. So I would say for sure it was overdesigned for what we see. Now, having said that, I think if we had taken the Central Block approach and put a compressors in at the very beginning of this, I think we would have seen a very different decline curve. Not necessarily more reserves, because you're not getting more reserves, but what it would allow us to do would have been to level out some of those declines a little bit more. So lesson learned on that one for sure. Although that would have been, probably another $5 or $6 million. See what we got here. If the government is so supportive of growing production, what financial actions are they taking to help companies like Touchstone ramp up production? Brand new government, have not met with them yet, have not had those discussions with them yet. We'll wait and see what they come up with. There's some basic things they could do, things like the VAT refunds. Kale and Scott and the team, we're still a year behind on VAT refunds, so you're looking at $3 to $6 million. Some simple things like that they could do fairly quickly. I still think there's a big disconnect between the tax rate we pay and what the petrochemical and the LNG plants pay. They're about 20% less than us. That would be a very simple one to take a look at. Although we've got enough tax pools to cover that, it's still, an effective tax rate. But it's I think there's a bunch of little things they could do from that point of view. I must admit, in the field, the forestry folks that we used to take a month or two to get, we phoned them and said, hey, can you guys come out on Wednesday? We're looking at Central Block. They were there on Wednesday. I think we had like 20 people on site, and to start looking at doing the surveying. So, I think they understand it. They're receptive to it. I think that's trickled down through the organization, and the results will really do the talking on that. But on the financial side, I think that's probably the big one on that. A couple more here. Asking again, the strategic investors, who are they? I really have to let them do it, and it's a self-reporting mechanism for them. So if they're over 3%, they'll have to report on it. Why is the company slow to implement improvements on processes? Board side took nearly a year to reduce. What other costs can be reduced? Yeah, I take a little bit of exception to this. I think, especially on the board side of things, we went through a process on that. The directors elected directors last year. We got feedback that, quite frankly, in conjunction with the wells maybe not performing as well, where could we save some costs? We reduced the board from 9 till 6, and went through a process to make sure the 6 people that were on there were the right people to have on there. We've done a bunch of other things on expense side, and you can see that when you go through the MD&A, just focusing on some things that we've done. We've actually done a couple of small dispositions of properties that were underperformers. We've been able to use either drilling credits or cash in what we've looked at doing. That's also reduced our head count. There's a lot of stuff that we've been able to do on that front when you take a look at it, and we're continually looking at that. I don't think that's something that you ever want to stop doing. But the best example of that, quite frankly, is we just brought in 2,000 BOEs a day of production, an 80 million a day gas plant, and we didn't add any G&A. So when you think about that, everything that we brought in will be in the operating cost basis, and you've now spread the G&A over a much bigger base. So I think that's also speaking to the efficiencies that we're starting to see. Talking about greater transparency here, we do have a communication policy that's posted on the board and RNS announcements. I think this gets back to my question. I think it's Mark that's asking this question. I'm not going to commit to kind of a monthly update because I don't think shareholders need to get into the operational side of things. But I do hear you that a lot of the stuff we do is interesting. And our approach to that would be to be able to provide that information sort of on a continual, timely basis. But again, our hands have been a little bit tied, and quite frankly, we haven't been doing a lot. And we're going to get very active now. So from a transparency point of view, hopefully you'll see more of that in what we're doing. The next one here was again asking about we're locked into a lower price contract for 16 months. I think I talked about that, and I apologize if I misspoke on that before about giving some thinking that the Central Block contract was a lower price. It's a higher price contract, but it gets higher again when we get above that 22 million and we get into the new contract in 2027. Why is the forecast for production given back in December, excluding Central Block, so poor? You'd originally forecast 2 wells drilled by the end of Q1. So, the reality is we had to reset expectations in December, and I hate to go back and have to do this again, but the wells didn't perform the way we wanted to, and shareholders have asked for transparency, so we gave them transparency. So when we put out those new forecasts, they were based on the new information, and yeah, I think we're all disappointed in that, but that's the reality. These are still very, very economic wells. You get your payback, in months here. We're not talking years. So, we had to realign the expectations. And as far as the wells not getting drilled in Q1, I think I went into detail. We tried to save some money drilling the first well at Coho, at Cascadura. Didn't work. As opposed to us keep going forward and spending bad money after good, we stepped back, analyzed it, and now we'll go back with a new plan going forward. So I would hope that's what the shareholders would want us to do. Going to run out of time here in a minute, but let's just see here. The next one would be, the question was here, the latest equity raise resulted in 25% increase in shares. Are you confident the institutions purchasing the shares are intending to remain investors long-term and not just turning over the shares for a quick return? Yeah, I mean, it's always a risk you run, but I think the fact that this was well oversubscribed, we cut back everybody in their allocations. And I think they're looking at this as being a long-term, their view was that the stock ran up on the exploration excitement. And then while you're building facilities and things, that's not very exciting to the market. And we obviously had the disappointments in the wells. They see it now entering a production phase, which is where they are more comfortable as big institutions because they think the risk is much lower. So I would hope that they would hang in there. Obviously, you have no way of knowing that, but these are investors that are long-term, generally long-term players. Talks a little bit. The next one was the RNS on CAS 4 and 5. Reason for delays. I think I've covered that off a number of times. Says few Touchstone wells have been drilled problem free. I think it's fair if you look at Touchstone just in sort of an echo chamber of its own. Yeah, we've had a lot of trouble drilling the wells, but if you step back and you look at BP having the same issues, you look at Heritage having the same issues, you look at EOG having scrapped some offshore wells. This is just tough drilling. And quite frankly, that's why when we stepped back, we went to one of the world leaders on the consulting side and said, okay, what have we done? What have we done right? What have we done wrong? And we need to get the best people you got to help us out in drilling the next 5 wells. So that's the approach that we've taken. Talking about a Gantt chart, talking about some wells and how we're layering in those production numbers. Yeah, I think that you'll see that now. And I guess what we're trying to do is, as part of transparency, is we're not going to try to hide the big declines that we're expecting. But what you really want to do is see these wedges add up. And I was doing an interview with discussion with Malky the other day, and he said, what would you really like to see? And I said, well, what I'd really like to see is people start to focus on the wedges once they've, the flat parts of the platform, and if we can build those up over time, because if people continue to focus on peak production rates and then get disappointed in the declines, they're going to continue to be disappointed. But what you can do is you can see we get all of our cash back over that short period of time, and then you get a 15-year run life on these wells. So they're going to set up from a very long, lifelong cash flow opportunity, as we see. Talking about the decline of the share price, some of the root causes of that. I don't think there's any more of a root cause than those decline wells at Cascadura. I mean, they're a disappointment to everybody. They're a disappointment to us. They didn't perform the way we wanted to. And I think when you look at that, it affects cash flow. It affects everything, right? So that's why we had to reset the expectations in December. And I think we did that. It talks here about relocating the chief operating officer to Trinidad. So, we've tried that model before, and what ends up happening is everything kind of funnels through to one individual, and then it funnels back out to all the technical people. And we actually found it really inefficient. We found it better to have a position where it's a very flat structure, and that's what we have right now, where all the G&G, whether they're in Trinidad or they're in Canada, it's all one group. There's kind of no us and them type approach to it. So we found that model has worked much better, especially on something like this drilling, where we quite frankly, we need worldwide expertise on what we're looking at doing. And if we had just the Trinidad, again, you kind of get into this echo chamber, which is, this is the way we've always done it. This is how we do it. And my argument to that is, well, it doesn't work, but that's the way you always do it. And that's just not a good answer. So I think this model actually works pretty well. It's also very expensive to have expats in Trinidad from a cost point of view. And we think also from a sort of a social license point of view, the talent in Trinidad, engineering, geologically, and everything else is exceptional. And, from our point of view, we think the way we have it is pretty good. When do you expect to start? I think this is maybe one of the last 2 questions. Production from the CAS 4 and 5 wells. So the 2 wells will get drilled back to back here, depending on how long they'll take. All the equipment's on the ground to tie it in, so it'd just be a short period of time after that. I think right now we're looking for Q3. We'd like to see those wells on production. Could the Coho gas be redirected to the LNG market? No, because it's under the Ottawa contract. So the Coho volumes right now are not. We're having that negotiation, but I don't foresee them giving that up, because you kind of think about, they're buying cheap gas, putting it through Central Block, and quite frankly, they could be selling it to the LNG market. They're not going to give up that kind of margin. So we're going to have to figure that out. How does the cost of your $30 million debt facility compare to your existing debt facility that pays rates of 6 to 8%? It's right in the ballpark. It's about 50 basis points higher. And it's on a floating rate, but basically it's a very similar rate in what we see. When can you expect the first Cretaceous well to be drilled? I think probably 2026. The only reason I hesitate a little bit on that is depending on how the team kind of feels about Sapero, it might be early 2026 because we could take a well down at Sapero. Taroom is probably the easiest one to drill, but with all the development that we've got in place at Cascadura, Coho, and Central Block, especially if we can get some price changes on the Ottawa contract, man, that rig's going to be drilling up all of those. That's what we want to do, is just convert that, get that production up, prove to everybody that we can do what we said we were going to do. Gotta scroll down here. I'm not going to get through all these questions. We only got a couple of minutes left. Talked about the repricing. Can the wells be stimulated frac? That's an interesting question. It's actually something we're looking at. The Cas deep well was producing from a fairly tight zone before we reperforated and moved it up hole. We actually have all that information and it's out being analyzed. It looks like they did a frac at one of the Central Block wells at one point. So we've also hopefully get that data. We haven't seen it yet. Hopefully we get that data here in the next little while and we can take a little bit. So that'll give us another data point as to whether we look at that. Let's just see. When is the new guidance due for delivery? I think that's a fair question. And I'm going to be a little bit vague on this. We need to make sure that when we give everybody that data, it's exactly right. And the biggest component of that is going to be the Central Block contracts and production data. So we're going to be at a little bit of a whim to get all that information here over the next couple of weeks, and then sort through all of that and make sure we've got the right forecasts in for those volumes. Because that's going to be what you'll see. Is it's not the biggest volume number at 2,000 BOEs a day, but when you get these higher prices, it just has a material effect on how it changes the funds flow. So give us a bit of time on that in what we're looking at. I keep getting asked a bunch of questions in here about gas prices sold over the 22 million. Again, let us get through the data so we can give you the right number. But again, it's going to change month to month based on the LNG. Some of these, I don't really see too many in here that I haven't.
Well, Paul, let me jump in there. I'd just like to thank you for answering all of those questions. You covered a lot of ground there. Of course, the company can review all the questions submitted today, and we will publish the responses on the Investor Meet Company platform. Perhaps just before redirecting investors, provide you with their feedback, which I know is particularly important to yourself. Paul, could I just ask you maybe for a few closing comments?
Yeah, I apologize that I wasn't able to kind of get through all those questions. It's a little tricky to be trying to read them and answer them. So I apologize if I bounced around. But listen, I think the big takeaway here is that we are going to provide you with a lot more transparency and a lot more updates. I think this is a pretty good example of that. We have to be careful not to give proprietary information. But the big takeaway here is this Central Block facility gives us the ability to move capital around, to be a lot more strategic in what we're looking at doing. And that's obviously what we're going to do. The number one focus for us right now is to drill some wells. We need to get the drilling costs down. We need to be able to get those predictable. We need to be able to get the wells drilled, and we need to be able to get them on production quickly. And it's just not that complicated. Like when I say it's not that complicated, the drilling is very complicated, but the story is pretty simple. We've been building all these blocks for the last 5 years, and I know everybody's heard me say that. All we need to do now is drill wells. We don't need any more permits. We don't need any more, facilities, pipelines, any of that kind of thing, gas contracts. We just need to drill to fill, and that's a pretty good place to be in a basin that's full of hydrocarbon, to be the biggest onshore producer now in Trinidad. So. I think the story's changed. It's way less risky than it was 4 or 5 years ago. And we had to reset expectations, which I hope we did. And now we just need to meet the new expectations. And that's our number one goal going forward.
That's great, Paul. I'd just like to thank you for updating investors today. Can I please ask investors not to close the session, as you now be automatically redirected? Provide your feedback and all the management team can better understand your views and expectations. On behalf of the management team of Touchstone Exploration, we'd like to thank you for attending today's presentation, and good afternoon to you all.